Hi everyone, we are from Group Aopai, are going to present our financial statement analysis based on CIMB Bank, Hon Leong Bank, Maybank and RHB Bank. There are 4 of us in this group. First, me myself, Mansel. The second one is Jeander, Natasha. The third one is Elissa Afika, and the last one is Irfan. So let's start. For the executive summary, there contain 4 companies named Hon Leong Bank Berhad, CIMB Group Holding Berhad, Malayan Banking Berhad, and RHB Capital Berhad. We use the year of 2020 and 2021 for these 4 banks companies annual report from the Bursa Malaysia website. Understanding these sorts of analysis is crucial since they may be highly beneficial to both internal and external users of the financial statement.
The 4 companies in this group of corporate financial statements analysis are listed on Bursa Malaysia primary market. They are all categorized under the same sector, the financial services sector. This series of research focuses on the bank's financial result from 2020 to 2021. There are some instruments required to assess the financial statements of the banks, which are common size financial statement, comparative financial statement, and financial ratio. Next, we'll look into Hon Leong Bank Berhad background. HLB was originally incorporated as Hong Lee Mortgage and Remittance Company in 1905 in Kuching, Sarawak, and later as Hong Lee Bank Limited in 1934, bearing the heritage of the oldest local financial institution in Malaysia. On 3 January 1994, Hon Leong Group acquired MUI Bank Berhad through Hon Leong Credit Berhad and renamed it Hon Leong Bank Berhad. Today, the bank is Malaysia's 5th largest banking group by asset with over 254.3 billion in asset as at 30 June 2022 and 4th largest by market capitalization as at the same date.
RHB is a public company that listed on the Bursa Malaysia in 2016, which its main line is providing commercial banking services and other financial products. There are 5 business pillars that RHB have, which include Group Community Banking, Group Wholesale Banking, Group International Business, Group Sharia Business, and Group Insurance. The bank has gained a total income of 7,789 million in 2021, while 7,186 million in 2020. They also have established a strong footprint throughout Malaysia with 362 branches and offices, with presence at other countries across Asian region. Include Malaysia with total revenue across the year 2021 with amounted 6,913.6 million and 6,439.1 million in 2020. Singapore, which offers services like retail banking, capital market, and security services. Indonesia have 15 branches across the country, while Thailand has 10 branches in their region. Other countries like Vietnam that offer services for securities and representative office, Brunei, which recorded total revenue 4.1 million in Brunei dollar in 2021 and 3.7 million in Brunei dollar in 2020. Laos, which have 69 employees that work under their roof in 2021 and 2020. Cambodia, which offers services like retail banking, capital markets, and securities market. And last but not least, Myanmar, which only offers services for representative office only.
For the Maybank background, Malayan Banking Berhad, known as Maybank, is the largest supplier of financial services in Malaysia. Was created in 1960 and has significant activities in Southeast Asia. The bank offers services including leasing, venture capital, insurance, asset management, stock broking, nominee services, and internet banking. Chief Executive Officer for Maybank today is Datuk Khairul Saleh Ramli. Co-Tech Part a Malaysian business tycoon who passed away in 2004, created Maybank. Amir Sham Abdul Aziz, the company's president and CEO, has been in charge for around 20 years. With $47 billion in total assets in 2004, Maybank, the biggest bank in Malaysia, was ranked among the top 120 banks globally.
CMB Group is a financial service provider that operates in several countries. The company has several subsidiaries and divisions, including a consumer bank, an investment bank, and an Islamic bank. CMB Bank is the second largest commercial bank in Malaysia by asset and has branches in several other countries, including Singapore, Thailand, and Vietnam. CMB Islamic offers Sharia-compliant products and services, while CMB Investment Bank provides corporate investment banking and equity brokerage service across Asia and the Pacific. CGS CMB Securities is a joint venture that offers equity brokerage and research services.
In 2020, RHB paid interim dividend as much as 10 cents per share and the final dividend 7.69 cents per share. While in 2021, the cash dividend that paid to shareholder only amounted to 15 cents per share. RHB have proposed to undertake a dividend reinvestment plan where the shareholder is given with the option to elect to reinvest their cash dividend into new ordinary share of the bank. RHB has introduced restricted investment account where the profit from the business venture will be shared among the RHB and the investor, which are HB act as manager funds, and all the losses will solely carried by investor. For housing loans, unrestricted investment account will take place. RHB also has supported government initiative in handling pandemic in 2020 and 2021, where they decided to reschedule and restructure the financing advance to suit the specific financial circumstances of borrowers.
Now, we will look into management discussion and analysis for Hong Leong Bank Berhad. HLB provides a review of Hong Leong Financial Group Berhad's, which is business operation and financial performance. In 2022, it remained a challenging year as the global economic recovery faced challenges ranging from the emergence of new strain of the COVID-19, supply chain disruption, the Russia-Ukraine armed conflict, and high inflation rate. Interest rate rose at a rapid pace in some advanced economies and negatively impacted the investment markets. Malaysia benefited from its high vaccination rate and was able to remove mobility restriction, and as a result, domestic demand and trade numbers improved. The group recorded a net profit attributable to shareholders of 2.45 billion, representing 8.3% improvement over previous year, supported by robust contribution from the group core businesses. Hong Leong Financial Group Berhad is an investment holding company and has three core businesses in the group. The first one is commercial and Islamic banking under Hong Leong Bank Berhad. Secondly, insurance and family takaful, housed under Insurance Holding Company HLA Holdings Sendian Berhad. The third one is investment banking and asset management under Hong Leong Capital Berhad. In 2022, HLB revenue was reported at 5.6 billion, or an increase of 2.4% year to year, underpinned by higher net interest income by loans and financing growth and effective funding cost management. Net interest income increased to 4.62 billion, or 7.2% year to year, as expansion in loans and financing and robust control of cost of funds mitigated the impact from lower security yield. Net interest margin remained stable year to year at 2.14%.
For the management discussion analysis for Maybank, consumer loans, which made up to 27.5% of the total and had a significant 21% growth because to an improvement in consumer sentiment. According to a statement with the stock exchange, Maybank's net interest income and Islamic banking revenue with for the quarter under review increased by 12.7% to 5 ringgit and 22 billions as compared to the same quarters in 2020. In the ongoing measures, the efforts of the Malaysian government and Bank Negara to stop the use of the banking system for money and laundering and terrorism funding, Maybank Group is at the forefront. The group's other operating income decreased by 2,828.5 million ringgit or 38.8% from 7,299.2 million ringgit in 2020 to 4,470.7 million in 2021. Maybank has a sizable customer funding based on 617.7 million ringgit thanks to its intensive retail franchise, and it has access to a variety of wholesale financing sources according to its strong credit rating. Reaffirmed as the top 100 global bank brand and the most valuable bank brand is Malaysia with a AAA grade. This business sought to improve service delivery for manufactured capital with convenient access to 4,757 self-service terminals and 2,617 retail outlets. For the investor, conferences and non-deal roadshows are two ways that Maybank interact with and inform our financial capital providers. The company's goal to become pervasively digital is to transition from being a provider of financial services to becoming a lifestyle partner of our customers. For the retail market, they want to provide clients the capacity to make more informed financial decisions, expand their access to underrepresented populations, and to improve their day-to-day banking experiences.
Management discussion and analysis. The company had a strong financial performance with profit before tax and net profit tripling from the previous year. The return on equity was 8.1% and the common equity reached a new high of 14.5%. Operating income saw positive growth due to an increase in net interest margin and steady loan growth. However, non-interest margin is an area of development. The company's CASA ratio was 42.5% and they carefully managed costs, resulting in a 14.9% expansion of pre-provision operating profit. The company also emphasized employee health and well-being and achieved their 2024 sustainability goals 3 years early. Despite the effect of COVID-19 on the economy, Malaysia's national key economic areas saw improved output and growth was 3.1%. Government stimulus programs helped to mitigate and support the recovery.
Looking into the balance sheet of RHB Bank, the total assets have shown a positive movement in the both year 2020 and 2021. As for 2020, loans, advances and financing have the highest portion with 55.98% and same as the year previous, the same item. Loans and advances and financing in 2021 also took the highest portion with 57.10%. As for the financial investment at amortized cost, have increased in its common size in 2021 compared to 2020, which increases from 5.21% to 5.46%. The other asset took only 0.65% of the portion in 2020 and 0.91% in 2021. The trend analysis for total assets, statutory deposit have increases from 2000 to 2020 2020 to 2021 with 56.57%, while the tax recoverable have significantly decreased with 75.41%, while right of use asset have increased by 19.96% in both years. Investment in subsidiaries have slightly declined around 5.16% in 2021. This also affects the total non-current asset, which also increased by 8.32%, make the total asset also increase to 2.99%. After looking at the note to the financial statement, the decrease by investment in subsidiaries is because the share capital of the company have been reduced from 1,487.8 million to 1,220 million via repayment of 267.8 million to the bank in 2021. Moving to the liabilities, in terms of deposit from customers, they are slightly decreased in between 2020 and 2021, with both years has recorded as 68.65% and 68.27% respectively, which make these two items become the highest portion for the overall of current liabilities. However, for deposit and placement of bank and other financial institutions had slightly increased from 12.58% in 2020 to 12.74% in 2021, while total liabilities have been increased from 88.86% in 2020 to 88.91% in 2021. The total equity, on the other hand, have been decreased about 11.14% in 2020 and 11.09% in 2021. The trend analysis shows the subordinated obligation are the highest trend from 2020 to 2021, which is 28.55%. There also have some increases in lease liabilities in 2021 with 20.14% of percentage. The increases happen because of repayment of lease liability for more than 3 years have been recorded as 9,969 in 2021 compared to in 2020, which only amounted as 2,557 ringgit, while for repayment within 1 year recorded as 46,588 ringgit in 2021 and only 42,799 ringgit in 2020. The derivative liabilities faced the highest drop in 2020, which make it recorded as 52.60% decreases compared to the previous year, which in 2020. Looking at the income statement of RHB Bank, interest income had decreased about 10%, which is from 110.43% in 2020 to 100.42% in 2021. The interest expenses also dropped from 50.10% in 2020 to 35.29% in 2021. On the other hand, net profit for the financial year has slightly increased to 31.99% in 2021 from 28.68% in 2020. Allowance for credit losses on the financial asset have the biggest drop in 2021. The decreases have been calculated or recorded as 12.85% in 2020 and dropped to 1.77% in 2021. According to the trend analysis of the income statement for RHB Bank, the revenue show a downward trend throughout the 2 years. It decreases as much as 0.94% between the year of 2020 and 2021. The decreases in the revenue caused the other operating income for the bank also increased to 32.59%, and the lowest drop in the trend in between 2020 and 2021 is allowance for credit losses on the financial asset, which losses recorded as much as 86.34%. Despite all of the losses and decreases in the trend, the income from Islamic bank business successfully increases slightly differ from the previous year, which in 2020 to 2021 with increases in 27.57%, and for the taxation and zakat also show the upward trend with increase about 30.06% from 2020 to 2021. The trend analysis of cash flow for RHB Bank divided to three categories, which the first category is the operating activities. For operating asset, which total decreased to 52.52% deposit and placement with bank and other financial institution has decreased as much as 58.47%. Other assets also show the decreases in its trend to 68.90%, and with the same trend changes, decrease in statutory deposit to 94.67%. All these three items decreased from 2021, which they have recorded less number in 2021 compared to in 2020. While loans, advances, and financing has recorded positive increases in 2021 to 221.982% compared to in 2020. In terms of operating liabilities, the total of upside down of the item in the operating liabilities cost declined in trend down to 43.52%. The biggest drop down from operating liabilities is obligation on securities sold under repurchase agreement, which have dropped to 87.60% in 2021. And the increase in risk cost obligation on loans sold to Cagamas with only 19% cannot support the big cap down the downward trend in operating liabilities. The second category is investing activities. Purchase of intangible asset increased with positive number, with amounted up to 30.05%, which costs 107,565 in 2020 and 552,893 in 2021. The biggest decrease in investing activity is the proceed from disposal of property, plant and equipment, with recorded down to 92.22%. Dividend income received from subsidiaries decreased as much as 57.51%, and the additional investment in subsidiary dropped to 60.31%. The proceeds from issuance of senior debt securities have the biggest increase in percentage, with in 2020 it cost only 300,000, but in 2021 it cost up to 2,075,557 ringgit, which also increased to 591.85%. The dividends paid to equity holder of the bank only decreased to 5.71% in 2021. In 2021, the principal of lease payment has increased to 55,310 ringgit compared to in 2020, which only 50,348 ringgit. This item increased only 9.86%.
Now we'll look into the financial position for Hong Leong Bank Berhad. In 2020, the total asset is 221 million increased to 237 million in 2021 with a trend analysis of 7.16%. While for the total liabilities in 2020, it recorded 194 million increased to 207 million in 2021 with a trend 7.02%. While for the total equity is 27 million in 2020 increased to 29 million in 2021 with a trend of 8.17%. Now we look into the income statement of Hong Leong Bank. The revenue in 2020 it recorded 3,931,000 increased to 4,547,000 in 2020. Profit before tax in 2020 it recorded 2,989,000 increased to 3,470,000. As for net profit for the financial year, it recorded 2,494,000 in 2020, increased to 2,860,000 in 2021. Next is Hong Leong Bank Berhad cash flow. In 2020, the net cash generated from operating activities is 10 million, decreased to 6 million in 2021 with a trend negative 33.99%. The net cash used in investing activities in 2020 is 6 million, increased to 9 million in 2021 with a trend with 42.71%, and the net cash used in financing activities is 935,000 in 2020 and decreased to 920,000 in 2021 with a trend analysis with negative 1.66%.
Financial position of CIMB Bank. Amount owing by subsidiaries climbed 1,425% in 2021 compared to 2020. Property, plant and equipment fell 90.97% while other assets increased 0.7%. The significant decrease in amount owing by subsidiaries could be due to subsidiaries taking on more debt to finance growth or expansion, experiencing financial difficulties and unable to pay back loans or other debts, investing in assets or making acquisitions that are not generating enough revenue to cover the costs, or paying dividends or other distribution to the parent company that are not fully covered by the earnings. Depreciation and impairment may have caused property, plant and equipment to drop. Write-off and derivative financial instrument movement may explain other assets being unchanged. Amount owing to subsidiaries climbed 3,035.60% from 20 to 21, the greatest. Other liability declined 52.49%, the highest. The value of derivative financial instrument and kagamas loans and funding dropped, lowering financial performance. Other borrowing declined 0.02%. Reserve fell 75.28%, while ordinary share capital rose 4.86%. Treasury share were unchanged and total equity rose 0.3%. Income statement of CIMB Bank is the common size analysis suggests that the company may have struggled to generate revenue and control expenses in 2021, leading to a decline in its financial performance. This is evidenced by decrease in interest income and increase in interest expense, decrease in net non-interest income, and increase in overheads. Overall, the trend analysis shows that companies' revenue, profit, and net non-interest income have decreased significantly from 2020 to 2021, while overheads have increased. Cash flow for CIMB Bank is the company's operating activities in 2021 lowered earnings before taxes by 74.74% compared to 2020 the most. Subsidiary impairment allowance grew 110.29%. Investment property depreciation was the most stable, lower depreciation, dividend from subsidiaries, and interest expenses as well, and increase in subsidiary impairment allowance and other predicted credit loss and impairment allowances caused the profit before tax to drop. Operating assets and liabilities fell, reducing cash flows from operation and tax paid in 2021. In 2021, operating cash flow decreased. In investing activities, net proceeds from debt instrument sale purchases climbed 286.67%. Subsidiary dividend fell 66.90%. Acquisition of subsidiary equity decreased 17.76%. From 2020 to 2021, investment net cash flow rose 205.99%. CMB's 2021 dividends fell 77.59% from 2020. Commercial paper and medium-term note interest grew 43.72% in 2021 compared to 2020. In 2021, term loan interest declined 16.60% and subordinated obligation interest reduced 7.50%. In 2021, the company repaid its term loan facility and issued more commercial papers and medium-term notes than subordinate liabilities. In 2021, the corporation paid less subordinate debt than in 2020 but non-revolving credit facility, commercial papers, or medium-term notes. This increased financing fund in 2021 compared to 2020.
For the current assets in Maybank, loans, advances, and financing to financial institution recorded the highest trend analysis at 16.50%. Meanwhile, derivative assets recorded the lowest at negative 35.92% in trend analysis. For the common size, loans, advance, and financing to financial institution recorded almost the same amount, which is 0.11 and 0.12 in 2020 and 2021 respectively. For the non-current asset, deferred tax assets recorded the highest at 90.33%. Meanwhile, financial assets purchased under resale agreements recorded the lowest at negative 33.10%. And this is the trend analysis. For the common size, right-of-use assets dropped a bit from 0.15 in 2020 to 0.75 in 2021. Property, plant, and equipment dropped from 0.78 in 2020 to 0.75 in 2021. For the current liabilities, non-current liabilities, and equity, we can see a trend analysis. For the current liabilities, provision for taxation and zakat recorded the highest at 104.968%. Meanwhile, borrowings recorded the lowest at negative 6.690. For the trend analysis, in current liabilities, insurance, contract liabilities, and other insurance payables recorded the highest at 11.67%. Meanwhile, deferred tax liabilities recorded negative 63.35%, which is the lowest. For the equity, total liabilities and shareholders' equity recorded 4%. It increased from 859.514 in 2020 to 888.172.393 in 2021.
Asset quality ratio. This ratio, which is often referred to as the loan loss rate, calculate the loan impairment charge for the year as a percentage of the total amount of loans and advance made to customer. Loan loss reserve ratio. It is the bank percentage reserve to cover projected loss from default loan. The loan loss account contrasts gross loan outstanding. This ratio compares the company's loan portfolio against competitors. Maybank had the greatest loan loss reserve ratio in 2020 at 21.97%, while Hong Leong had the lowest at 0.9%. This shows that Maybank set aside more loans to cover probable loss than Hong Leong. In 2021, all banks decreased their loan loss reserve ratio, with CIMB decreasing the most from 1.51% to 0.73%. CIMB had fewer loan loss in 2021 than 2020. RHB fell the least from 2.6% to 2%. Impaired loans to equity ratio. The impaired loans to equity ratio measures a bank held by comparing the total amount of impaired loans to its equity. A bank may be in a financial danger if its impaired loan ratio is high. However, a lower percentage means the bank's loans are in better shape and less likely to fail. According to the report, CIMB had the lowest impaired loans to equity ratio in 2020 at 0.49%, followed by Maybank, Hong Leong, and RHB. CIMB improved to 0.48% and Maybank to 1.88% in 2021. Hong Leong's ratio rose to 1.4% and RHB to 7.8%. This ratio showed that CIMB and Maybank can withstand non-performing loan loss better than Hong Leong and RHB.
For net interest margin ratio, it shows all the bank has increased from 2020 to 2021. For Maybank, in 2020, the net interest margin was 2.16%, increased to 2.3%. For Hong Leong Bank, in 2020, it was 1.88%, increased to 2.14%, while RHB, in 2020, it recorded 1.94%, increased to 2.01%. And last, for CIMB, in 2020, it recorded 2.27%, increased to 2.54%. For return on average asset ratio, all the banks show an increase from 2020 to 2021. For Maybank, it increased from 7.66% to 9.28%. For Hong Leong Bank, in 2020, it was 2.23%, increased to 2.39%, while RHB, in 2020, it was 9.08%, increased to 1.75%. And last, the head CIMB, it recorded 0.2%, increased to 0.7%.
This is leverage ratio. For tier 1 leverage, we can see for the CIMB, Hong Leong, and RHB, it increased. Meanwhile, Maybank, it decreased from 27.12 to 26.76%. For the debt to equity, we can see only CIMB Group Holdings Berhad decreased from 0.57 to 0.52% in 2021.
The current ratio of Maybank, CIMB Bank, and Hong Leong Bank decreased from 2020 to 2021, while for RHB Bank, it's static from 2020 to 2021. The average for these four banks for each year are 1.191 times in 2020 and 1.096 times in 2021. It showed that Maybank has decreased its current ratio from 0.312 times in 2020 to 0.283 times in 2021. In 2020, CIMB Bank also has recorded decreases in the current ratio with 2.2 times and 1.86 times in 2021. Same as my bank and CIMB Bank, Ho Leong also has decreased in current ratio, which 1.16 times in 2020 and 1.15 times in 2021. Plus, each of the bank have average of current ratio 0.298 times, 2.03 times, and 1.15 times respectively. On the other side, RHB Bank is the only bank that has a static current ratio for both years, which is 1.09 times, and its average is also 1.09 times. The loan to deposit ratio of my bank, RHB Bank and CIMB Bank, increased from 2020 to 2021, while for Ho Leong Bank, the loan to deposit ratio decreased from 2020 to 2021. The average of my bank, RHB Bank, CIMB Bank, and Ho Leong Bank for the years 2020 and 2021 are 86.14% and 86.87% respectively. From year 2020 to 2021, the loan to deposit ratio for my bank is rise from 90.02% to 90.32%. The loan to deposit ratio of RHB Bank is increased from 81.5% to 83.90%. The loans to deposit ratio of CIMB Bank is high to 89% to 85.80%. While loans to deposit ratio for Ho Leong Bank are declined from 87.28% to 84.24%. For each bank, the average loan to deposit ratio both years are 90.17% for my bank, 82.70% for RHB Bank, 87.40% for CIMB Bank, and 85.74% for Ho Leong Bank.
Average loan loss reserve ratio is that loan loss reserve ratios for several Malaysian banks in 2020 and 2021, as well as the average. CIMB's loan loss reserve ratio is 1.12% lower than most banks. Ho Leong and RHB average 1% and 2.3%, whereas Maybank average 21.72%. Maybank, RHB, CIMB, and Ho Leong rank top the lowest in average loan loss reserve ratio. This shows that Maybank is more careful in its lending policies and has set aside a higher percentage of its loan for future losses. The higher a bank's loan loss reserve ratio, the more conservative its lending policies and the more it has saved for losses. Impaired loans to equity ratio. The impaired loans to equity ratio measures a bank health by comparing the total amount of impaired loans to its equity. A bank may be in a financial danger if its impaired loan ratio is high. However, a lower percentage means the bank's loans are in better shape and less likely to fail. According to the report, CIMB had the lowest impaired loans to equity ratio in 2020 at 0.49%, followed by Maybank, Ho Leong, and RHB. CIMB improved to 0.48% and Maybank to 1.88% in 2021. Ho Leong's ratio rose to 1.4% and RHB to 7.8%. This ratio showed that CIMB and Maybank can withstand non-performing loan loss better than Ho Leong and RHB.
Next is average for net interest margin ratio. CIMB ranked in number 1, as the average for CIMB is 2.41%, followed by Maybank with 2.23%, and Ho Leong Bank, it recorded as 2.01%, and last the RHB with 1.98%. Next, the average for return on average asset. Maybank ranked in number 1, as it recorded at 0.47%, followed by Ho Leong Bank 2.31%, and the third one is RHB 1.42%, and lastly CIMB with 0.45%.
This is ranking for Tier 1 leverage and debt to equity. In the left side, we can see there is a ranking for Tier 1 leverage and right side for debt to equity. For the Tier 1 leverage, we can see Maybank has a rank in the first place, meanwhile CIMB in the second place. For the debt to equity, we can see CIMB recorded 0.28 and ranked in first place. Meanwhile RHB ranked in second place.
Among those four banks, the best benchmark is IMB Bank. This is because this bank got the highest ratio in both years with average of 2.03 times compared to the other three banks. It showed that the liquidity of CIMB Bank is extremely high. The greater the current ratio, the better for the bank because it signifies the greater liquidity. Bank has the lowest current ratio with an average of 0.298% times, indicating that its current ratio is less than 1. A corporation with a current ratio of less than 1 shows that its debt is more than its asset and is due in 1 year or less. The bank may not have enough capital on hand to pay its short-term obligation. Based on the graph, we can see that Maybank is the benchmark company since they have the highest average with 90.2% compared to the three others bank. The loan to deposit ratio show the ability of the bank to cover loan losses and withdraw by its customer. As Maybank deposit keep rising for both years, they keep welcoming more customer, and as a result, more money can be lent to them, which also increase the earning. For the bank, loans are an asset as they earn interest income from lending. In 2020 and 2021, RHB Bank has the lowest percentage in loan to deposit ratio. It indicates that the bank cannot preserve its deposit. They failed to increase their deposit to go beyond the other three banks. When deposits are shrinking, it means that the bank has less money and they cannot lend more.
Alman Z score. CIMB Group Holdings Berhad 12-month Alman Z score is negative 0.5. CIMB Group Holdings Berhad had a negative 0.5 Alman Z score for fiscal years ending in December 2017 to 2021. CIMB Group Alman Z score reached negative 0.4 in December 2017. CIMB Group Holdings Berhad's Alman Z score dropped 5 years to negative 0.6 in December 2020. The Alman Z score for CIMB Group Holdings Berhad fell in 2018 negative 0.4, 2019 by negative 0.5, 2020 negative 0.6, and 2021 negative 0.6 also.
According to the graph above, Alman Z score Hong Leong Bank show an inconsistent. The most recent 12-month Alman Z score for Hong Leong Bank Berhad is negative 0.8. For the fiscal year ending in June 2018 to 2022, Hong Leong Bank Berhad's Alman Z score average negative 1.0. From fiscal year ending in June 2018 to 2022, Hong Leong Bank Berhad has a median Alman Z score of negative 1.0. Alman Z score for Hong Leong Bank peaked in June 2019 at negative 0.8. When looking back over the previous 5 years, the Alman Z score of Hong Leong Bank Berhad fell to negative 1.1 in June 2021, its lowest level in 5 years.
The latest 12-month Alman Z score for RHB Bank Berhad is negative 1.4. For the fiscal years ending December 2017 through 2021, the bank Alman Z score average negative 1.4. From the fiscal year ending in December 2017 to 2021, RHB Bank Berhad has median Alman Z score of negative 1.4. In the previous 5 years, RHB Bank Element Z-score peaked at negative 1.4 in December 2021. In December 2020, RHB Bank Berhad Element Z-score fell to 5 years low of 1.5. Since the Element Z-score of RHB Bank average is negative 1.4, it shows that the bank is in distress zone.
For the Almond Z score, we can see Maybank the latest 12 months recorded negative 0.4. Malayan Banking Berhad's Almond Z score for fiscal years ending December 2017 to 2021 in average negative 0.3.
CIMB Group can reduce various types of risk such as credit risk, liquidity risk, market risk, and operational risk by implementing measures such as tightening loan requirements, verifying consumers' financial statement, managing assets, maintaining a high risk wage capital ratio, conducting market survey, monitoring economic shift and market events, providing staff training, and regularly maintaining data and networking system. The company should also focus on maintaining a positive public image and have a strong risk management department in place. Additionally, forming a modest liquidity group, getting credit insurance, maintaining excellent ties with competitors, and fundraising for people to build a good public image can also help mitigate risks.
RHB Bank is a company that respects and brings highlights to their customers and shareholders in providing the financial services and solutions. The increase in debt to equity ratio in 2020 to 2021 with 1.1 at 7 and 1.26 at respectively show the bank have lots of debt in 2021. As the bank has a lot of debt, we suggest that RHB Bank should reduce its debt. They can use deposit instead of debt to finance its lending operation. This is because debt can bring more unnecessary costs to the bank, which is debt serving costs since they need to pay interest on the debt. Lots of debt also make the bank have lower profit margin. So for RHB Bank, they should really focus on decreasing their debt to avoid financial crisis.
Overall, the bank's total net income for 2021 grew to a record 5,467 million, up 14.4% year-over-year, while its net profit after tax reached a record 2,861 million, up 14.7% from the prior year. I would suggest HLB to make investment in digital platforms, data and analytic capabilities to assist its clients in managing their businesses for increased profitability, growth, and sustainability over the long term.
Recommendation and conclusion. For the Maybank, the strong foundation in terms of talents, resources, and financial strength put Maybank in excellent position to achieve the goals in the immediate and long periods, despite the difficulties presented by the economy and the rising competition. Maybank anticipates that when credit demand increases in unison with the anticipated economic recovery, group loans growth will also pick up speed. The bank is sure that with the ongoing help of its staff, customers, and shareholders in implementing performance improved efforts, Maybank will continue to look for new possibilities and trend for expanded growth both domestically and internationally.